Okay. Well, thanks, Mary, for the opportunity. We had a nice visit this afternoon in the tax committee meeting, kind of giving everyone an update regarding the new tax law, which there's certainly some very good news in that, i.e. the $5 million exclusion per estate. In addition to that, the transferability from one spouse to a second spouse. So we're talking about $10 million for a couple, and so that's good. We feel that if we take full advantage of both of those, and then special use valuation, which is something every ag family ought to take a look at when they're doing their estate calculations, maybe some discounts for LLCs, etc., that maybe you can have an estate of as much as 14 to $15 million with good planning, and I emphasize good planning, to escape federal estate taxes under the current law. The concern, though, is that these changes are only effective through 2012. So 2013, it's going to be a brand new ball game. And we're not sure how that's going to shake out because, as we know, taxes are certainly a political football back in Washington, D.C. So we have perhaps a lot of work to do between now and 2012. And hopefully we'll be able to retain some or most of the current tax law and maybe even expand on it. But at any rate, those are the concerns that in fact this is only for 2 years and we have to pay attention to what is happening after that particular point in time. For people that are planning right now, one thing they need to consider is the generation skipping trust, because this may be a one and only opportunity to actually move $5 million of assets out of their estate to a position where it can never be taxed. Okay, so that's something that they should talk to their financial advisors about, CPAs, etc., to determine if that would fit for them. The transferability issue, again, allows for some great planning in the event of the death of the first spouse. If they don't utilize their exemption, that can be transferred to the second spouse. So this gives more latitude and more options in the planning process, so that is in fact a big plus. Capital gains tax, this has been extended obviously for another 2 years at 15%. We're hoping that that will continue after 2012. But again, that's some of the work that we need to do, because farmland, ranch land is traded, it's sold, it's purchased back, and capital gains tax is a very important part of the tax bill. So those are some of the thoughts that we talked about in the meeting. We also talked about the importance, definitely, estate planning is not just about estate taxes. It's about actually what's best for you and your family. It's about people, okay? So keep that in mind when you're doing estate planning. That's the other half of the equation, and maybe more than half of the equation. That's important. But right now, everyone should take a hard look at what they've already done, review it with their advisors, see if there's something else that they can glean out of the current tax bill that may or may not be here after 2012. So let's do it, and do it right now, and I'd encourage everybody to do that ASAP. Thank you.